Hi everyone. Trade selection is, of course, about timing. I mean, trade selection in one manner is easy. You know you're going to have a look at the Dow. All right. So in that case, it's easy, and in looking at the Dow, you're only going to be looking at one of these time frames. Now, I don't like the 5 minute. I think it's a bit short, but in very volatile times, I've said in other videos, I can see why people might look at that. Equally, we're looking at the 4 hour here. I can also see in more volatile times why we might want to look at a bit of perspective, just step away from a bit of the volatility. And you can see, for instance, with the Dow, that has been doing rather well that time frame. We've got an entry over there. As you know from our methodology, we don't manage to get in at the bottoms because we don't have magical crystal balls or time machines. The stop losses are generated based on the volatility of the market. So I should repeat myself. Coincidentally, very often, they do end up very much near recent lows, just as we like it. And we certainly don't get in while the market's still falling because we're not gamblers. Okay. Now, what the 4 hour time frame does over here in trade selection, you can see it here, is because it's moved away a bit in terms of we're not looking at every single jotty move. We've got a bit more perspective. The trends can be, not always, can be a bit smoother and therefore picked up by our algorithms a little bit easier. It's a bit like having the same Ferrari driving in windy, wet conditions on a country road as opposed to a straight and smooth road. Guess what? Same car, same algorithm. It's going to find life a little bit easier, isn't it, when it's not being battered about, all right, by the conditions it finds itself in. That's the point that I want to make here. So 4 hour time frame, we have a quick scroll back and we look at a couple of, oh, well, we've got another one there. Okay, didn't get in near the bottom. And we think to ourselves, well, okay, it's not too spiky. I mean, there's a few worrying conditions when this happens. And the moves up and down are a bit large, get a bit worried, but smooth enough by the looks of it, seems okay. And you can see why and how we're selecting certain time frames on that. Okay, so I just want to give a bit of more insight right up to the moment with what's happening with time frame selection. That doesn't mean we forget our disciplines. Remember the other videos. We've still got to have a trailing stop loss. If we're not going to be at the computer, we still want to have a stepped stop. So once the market gets there, then we push this up. Because if you have a trailing dynamic one, whilst it'll keep any losses smaller than a stepped one, it will also mean that you will easily get stopped out more often. And also another thing I want to mention, let's say this happens, and I've discussed this in other videos, but I'm here, so I might as well tell you. If it goes up a little bit and then comes back down, I've seen other people say, well, you know what, I'm going to get out. And I have also mentioned this before, and you just re-enter once it gets back up to here and continues. And that can often be a better signal anyway. So don't panic if you think, oh no, it's not voodoo that we're doing that. Oh, it's just near it. Alpesh, what should I do? What should I do? You can, if you wish, of course, keep to the strict rules, which is you've entered there, trailing stop loss, or you know what, I'll re-enter if it does go against me significantly. All right. Now, this is an art. It's not a science. Therefore, you will find through your own temperament, through what works for you, and that's why it's important to keep a trading journal, the best solution to suit you on the indicator. But as you can see, it's been a rather good way of picking up the Dow despite recent volatility. Okay, hopefully that makes sense. Oh, let's just go back to the 1 hour just to compare it, to give you a comparison. You can see with the 1 hour how on the charts, yes, again, we didn't get it done, but we got this. Right, we got whipsawed, went in short, didn't work out for us, got stopped out. Yes, this made up for it. Of course it did, but you can see more likely because of the nature of the markets to get thrown off, whereas a little bit more perspective. That's not to say you should only do the 4 hour. I'm saying it is worth in more volatile markets like these to look at that as well and see if you can see more patterns being picked up. Okay.